All right, so let's get started. There's still people trickling in, but all the important people are here. So let's get started. Now, we hold these eFund investment team meetings every single month, usually on the fourth Thursday. And there is a set agenda, but we're going to deviate from that because today we're having our semi-annual open house with the company updates to see, how our companies that we've invested in are doing. And that happens every 6 months. The next time they will be asked to present to us eFunders will be at our AGM in June. And fingers crossed, we can actually have an in-person event at the Jericho Tennis Club, which would be awesome. That would be really nice. But not today. We are still virtual. The usual agenda, because we have quite a lot of guests today, is that we start with the PIM reports, that's post-investment management. Every single one of our eFund and portfolio companies has a PIM liaison attached to them, and they're the ones that keep tabs on our investment and gives us regular reports that's to the eFund directors, so that we can keep tabs on, if they're going to be doing a new raise, if there's a management change, any material news, they communicate back to us. But we are foregoing the PIM reports because of the company updates later on in this agenda. Then we follow by looking at the beginning of our deal funnel. So we'll be spending some time on that today. And then right after that, we usually have an educational section where, our eFunders do mind share. They have some experience or some expertise in some topic or another, and it's shared with the eFunders that are on the call for the eFund investment team meeting. But we're going to forego that because we have something even more exciting, because Peter Dorsman, our fearless CFO, has got some really great performance numbers to share with all of us. And so that will take that place. So our agenda today will be going over the business part of eFund, which will only be the discussion of the DD funnel. Then we'll go into an overview of eFund itself, then followed by the performance report led by Peter Dorsman, and then our company updates, where our fellow director, George Aleftiris, will be emceeing. So let's get started. All right, welcome to the semi-annual open house event. And we're doing it virtually. We're pretending to be in the Vancouver Club, which would be if we weren't under pandemic conditions. Any case, I already went through the agenda for today, so I'm just going to give an eFund overview very briefly. Then we'll go into some really fantastic numbers put together by our CFO, Peter Dorsman. He's the one who writes those absolutely awesome quarterly reports that you guys all read and makes you really happy. And then we'll have a bit of a Q&A before we turn the agenda over to George Aleftiris, who will MC the portfolio company updates. Then after that, we hear all the updates. Each of our companies will get their own online breakout rooms. So this will go for a period of 10 minutes. You don't have to stay in the room, but you'll be able to switch back and forth. And then we'll have random networking so that you guys can get to know each other, because this is how we get to know each other as a community and form our due diligence teams, because we get used to working with each other. All right, so let's talk about eFund. Did you know? Well, now you know. We've raised $3,763,410 since we first started in 2011. We made our first investment in December of 2011. And altogether, since our inception, we've made investments in 35 different companies. So exits and losses later. Today, we have a current portfolio of 28 companies in all these different industry sectors. And the market value is $11,903,625. Not bad. And eFund 5 is our latest cohort, and it's open for investment now. So who are we? Just want to let you know there are 165 of us, 165 eFunders, and about 43% of you believe in eFund so much that you reinvest every single year. And that's really good for a couple of reasons. One is that you diversify your portfolio so that you have a piece of a company in from every single cohort. That's absolutely crucial in this angel investment game because it's high risk investment. And secondly, we live in BC, which means that we get that 30% tax credit. So every single year you get that 30% tax credit. We have 28% of us eFunders are females, which actually beats the industry average. So we're hoping to get more women into this fund. And we got some really awesome women leaders and who are active eFunders. And that's really bodes well. It helps with the diversity of our investments because we bring in different perspectives. The drivers of eFund is that we all have a sense of community. We've got this culture of helping the ecosystem. And of course, we're investors, so we're looking at good returns. So our vision is to be the community-driven investing fund and to be the premier BC angel fund. And our goals are not just to get quality investee companies in our portfolio, but quality investors who share our values of community, culture, and returns. We have an advantage. We base a lot of our procedures on research and also good ideas that just come from the eFund crowd. You saw it in action earlier. So thank you, Karen, for bringing forth that idea, and thank you to Nina and her team for agreeing and being open to implement it. Well, it's an experiment. Let's give it a try. Where we invest, we're looking at a validated product market fit. The widget works, whatever the widget happens to be, a 3D printer or an algorithm for SaaS software, it works. So we're not interested in polishing up widgets. We're interested in making sure that the business model is robust, that it's scalable, can become profitable, and with a global impact on people, profits, and planet, globally. And that's what we want to do. Of course, it's always about the team, a team that can strategize, that can execute on the strategy and adapt as needed, nimble. And of course, we want to see a clear route to an attractive exit. We have a process. I think you guys all saw that at the beginning of our meeting where we go through the due diligence funnel. All these deals can be sourced from anywhere. All of you eFunders are actually acting as talent scouts in our entrepreneurial ecosystem. Wherever there are good deals, bring them into the system. We have tons of opportunities for entrepreneurs to showcase their stuff. We got university demo days, UBC, SFU, UVic. We have Angel Forum. We have Bantech. We have other angel groups, wherever they may be, accelerators, depending on you eFunders to go out there and scout for talent and bring them into our funnel. After we write the check, as I said before, we just don't write the check and walk away. Each portfolio company is assigned a PIM liaison, post-investment management liaison, who will serve as the link between the company and the eFund board. And there's a process in making sure that they conform to their stated KPIs. We hold these investment team meetings every month, held on the third Thursday. We review the deal funnel, we look at the due diligence, we look at all kinds of other things. So if you're interested in attending these meetings you haven't been to before, just email us, info@efund.ca. We also connect on Slack, and we connect in other ways as well. So just send us an email, info@efund.ca, and ask us. Here's our portfolio. Recall that I said that we're in diverse industry sectors. That reflects the diversity of our eFunders. They have domain expertise in all kinds of industry sectors, and the companies that we invest in are a reflection of that. Okay, I am now going to stop sharing, and I'm going to turn it over to Peter, who will tell us how we've been doing. Peter?
So everyone can see my screen?
Yes.
Good. So I want to kick off by saying thanks to everyone for working with us through the distribution of all the proceeds that came out of the Redland exit. So we paid out, it brought in about $1 million, and we paid the bulk of $800,000 of that out to our shareholders. Everyone got something. There were some struggles with MazumaGo for some, not for everyone. So I think 90% of the funds went through MazumaGo, and then a few people asked for a check, but that's the last time we're doing it because we're out of checks and we were fully automated virtual organization. And then a few amounts went through a wire transfer. So thanks everyone for working with us on that. And quite a few actually reinvested. So if you're thinking about what to do with your Redland winnings or your winnings from another deal, it's a good opportunity to reinvest. And we have tax credits available at present. I'm on the call. Okay. And thanks also for asking me lots of questions on the portfolio value. I get lots of emails about term sheets, portfolio value, and everything else. So keep engaging me. And when I send out my report, just challenge me, because I always look for ways to improve the reporting. And I've got so many data that I don't know what to do with. So I can tailor everything to everyone's needs. So if there's suggestions or ideas on the reporting, just let me know. So this is sort of where we are now in the portfolio. And someone asked the question, is the $11 million amount inclusive of the distribution? And the answer is yes. So here is on the first line is the portfolio value for each fund at today. What we have distributed so far out of each fund, and that adds up what the total value of each fund is. And I contrasted with the amount of money that we've invested in each fund. So I think that's clear, and you can see what the multiple is, how we've done, what the net profit is for each fund, right? Fund 1, 2, 3, and 4 are closed. They're performing reasonably well, especially Fund 1. And it goes to my thesis that it takes 7 to 10 years to see strong returns from seed stage investments, and we're seeing that now. The bulk of the value in Fund 1, most of you will know, some of it came out through Redland. The bulk of the fund value there is still carried by HTuO Bio, but we're seeing other companies, and I'll get to that in a second, increase their value by doing subsequent financings with VCs or private equity investors that drives up the value of our holding. So overall, we're doing well, and as you can also see, the number of investors, we started with $500,000 in eFund 1, and it took us 2 years to put that together. And now in less than a year, we got close to $1 million in eFund 5. So we have momentum and there's interest. And I think the interest comes because we have some results and people see how the eFund model is working at the moment. So the share prices for the individual shares, everyone buys it at 10%, or sorry, at $10. And you've seen a steady increase in the value of all funds, all holdings. The IRR, it's the full price. What I mean with the full price, that's the full price that includes what's been paid out so far. So what you see here in the column of September 30th is sort of what the value is in there, and then I add what's being paid out, so you are able to come up with a calculation of the full value that each share has represented. And I calculate these on a quarterly basis, and it includes sort of what's in cash in the fund, the exchange rate, because we've got quite a few investments in US dollars as well. And I'll keep updating you with these on a regular basis. For eFund 1 holders, so you see here the 133.48. That's an average price for eFund 1. There's 5 share classes in eFund 1. The A shares that were the people that came first, they're now valued at around $222. But that's because eFund 1 is set up differently from Fund 2, 3, 4, and 5. So that's only for people who are in eFund 1. I want to put that comment out there. That speaks for itself. So where are we winning, right? Where are we seeing the successes? Well, it's not a secret. The big hit is, of course, Semios, and we've invested, across the portfolio. We made an investment of 100,000 again out of funds 4 and 5. It's unlikely that we're going to see 114 times return like we did on the first investment in Semios, but Semios is a company that will keep going, and they're officially a unicorn now, and it's unlikely that they're going to go, be sold or anything. I think they really want to grow this and potentially even go public on one of the larger markets in North America. So very happy with Semios. Everyone knows about the Redland story. Everyone got a check out of this. Good returns, not as wild as Semios, but this is something that we were hoping for. If all our companies were like Redland, we'd be doing very, very well. So we're pleased with that. Finn, the automotive company at Victoria, they've just done the refinancing, so increasing the value of our investment 5 times. Vitamin Labs, also based in Victoria, doing very well with another round that they did this year, in which we participated again. Aspect, we just talked about that a little bit. They're very well funded through their VC round. And HTuO out of Victoria, also on the march as a successful SaaS company servicing the restaurant business, and they've done very well out of the COVID crisis. And Penny, based in Squamish, you can follow them on LinkedIn. They've got lots of updates. They did a few venture rounds as well, and they're on their way. So we got a pretty decent mix of companies, and these are the top performers. We've got a number of other companies that are equally well poised for success, but they're just a bit earlier. So what happened this year? So as I mentioned, we raised about 900,000 in Fund 5 since it opened about a year ago. We only made 2 investments in new companies this year. That was Lethub and HTuO. So hopefully we can add some new companies to the funnel as well, because we did a lot of reinvestment in MazumaGo, Semios, HTuO, Finn, Redland, Lethub, Lucent, Vitamin Labs. Why do we do that? We see the successes in these companies. We know the companies. We want to be part of the growth stories, and we want to give everyone who's participating in eFund access, as many people access to the successes that are happening with these companies. So the successes speak for themselves. These are the companies that were able to increase their value this year. Semios, Redland, SonicIncytes, Claris, Cupid, Ibbaka, Penny, Lethub, Vitamin Labs, Finn, HTuO. It's been a good year, and I cannot predict that 2022 is going to be as successful as this year. It's largely driven by the market. The stock market is riding high. There's lots of liquidity in the market. There's exits. It will, at some point, there will be a correction, and we'll see that when it happens. So I cannot guarantee continued growth in the way that we've seen this year, but it looks healthy and it's something to celebrate. We had our exit with Redland. We had some bad news as well. Microdermics confirmed full write-off. The board had Microdermics, so no future for the company. And I think Orbitlas is also on the list of disappearing as an investment from our fund. And Navigate Surgical and Views IQ. These companies continue to be sort of let's wait and see how it goes. We had Interpodia and Retreat.Guru on the watch list as well, but they've come off it because they've made their way through COVID. They recapitalized and they're poised for growth. And we're going to be hearing from Retreat.Guru in a minute. So the strategy is, reinvestment, right? Find the successful companies, reinvest in them, and join them on their growth, and keep backing the winners with strong DD updates. So we like to see updates from the DD teams as the journey continues. And if I don't hear anything, it's usually not a good sign. Then there's something going on with the company, and then I will chase them down. But so far, I think most of our companies are pretty good with either reporting to me directly or through the DD teams and letting us know what's going on. So active engagement with the companies. Most of our investors invest on their own, or a lot of them invest on their own with the companies and are keeping tabs on how the companies are winning. And again, I've said it a number of times, access to as many funds as possible. So if you keep investing, we'll keep investing in a way that distributes the earnings across as many people as possible in our fund. So how can you win? reinvest. I keep saying it. Redland exit benefited everyone everyone got something out of it. Some people got lots, some people got a little bit. Everyone got something. We had one investor who joined us, and the deal closed about a week later, and he got a check back. And he told me, this doesn't happen every week, but it was a nice thing to do. Diversify across multiple funds to enhance your return and success rate. I've mentioned a few times, and that's my summary. Any questions? I'd be happy to address them.
That's excellent. Oh, so to the lucky eFunder that put in his money 5 days before the Redland announcement, congratulations, that was luck. Don't expect that to happen again in the future. All right, anybody have questions or comments? Because this is an awesome report from Peter. Thank you, Peter.
Great.
Peter, I just have a quick question. Do we pass any of the losses write-offs to the shareholders or no?
Sorry, can you say it again, Abdul?
Do we pass any of the our write-off losses to the shareholders or
no? Well, yeah, we do. Essentially, if there's a write-off, sort of the share price will come down, but you won't really notice it in that regard. There's less chance of winning, essentially.
Yeah, but I mean, as in terms of is there a way? I'm just thinking out loud here. Is there a way to actually pass it as a capital loss or something?
Yeah. Oh, yeah. No, that way you benefit. So everyone actually, it's a good question, Abdul, because on the Redland, everyone got their check, and it will be free. There won't. It's unlikely you're going to have to pay taxes on that because we had some losses that we could crystallize and some expenses. So if we have write-offs in eFund, then we had a few, we will use them to offset taxes that we have to pay on gains. So that way you benefit. Good.
But I think the question.
So I think the question is more from an individual. Oh, sorry, Stephen. I think you and I are saying the same thing. Is that I think Abdul's question is more so from an individual perspective. So I, as an individual investor, can I benefit from those write-offs? But I don't think that's the case. I think that eFund definitely, yeah.
Yeah, we do, but indirectly you benefit because we don't have to pay taxes on some of the gains. So
yeah, as the investor, but not as an individual. We can't sort of say, hey, let's use this as a write-off for individual taxes.
There's no pass-through like there is in some energy companies where it becomes an able. And in any, our investment is actually in eFund. And it is eFund that has the investments into the investees.
Yeah, correct.
Great. Any other questions? Well, thank you very much, Peter. That was really great.
Good job.
Always nice to share good news. All right. So next up, we got portfolio updates, and we have updates from 10 different companies. And if you forget who they are, you can go to the eFund website and take a look at today's agenda, and the companies are displayed there. George, I'm going to hand it over to you to MC the rest of the meeting.
All right, thanks, Dazelle. And hopefully you can see the screen, and that and let me know if you don't. Great, super. And I'm going to just go for full screen. So you can see that, and now I know that we may have some of the entrepreneurs here in question, but I'm just confirming that we have. I can do the update for Lawrence, but for Arbutus, if you don't have.
I'm here, George. Yeah.
Perfect.
And,
I can see you. Now, great. Thanks, Lawrence.
That's awesome, and thanks everybody for welcoming me here. So I'm happy to give another update. It's great to see some of you since my last update. I think about 6 months ago. So for those of you that haven't seen us present before, Arbutus orthopedic device company that's built on the concept of frugal innovation. We partnered with DeWalt to convert a hardware drill into a simple orthopedic drill driver system that helps hospitals save cost. So the last year for us has been all about focusing on our beachhead market, trauma centers in the US, and the launch of a new product that we call SteriTrack. So this product launched in late April, and we're excited about it because it's our first true consumable recurring revenue offering. We provide the drill at no cost to the trauma center, then sell consumables in a razors and blades type of model. So at the time I last presented, we had just launched and we're starting to build some momentum in the marketplace, but in terms of KPIs, had no customers, 0 ARR, and 300K in trailing 12 months revenue. So in that time, now we've got 2 customers, 300K in ARR, and trailing 12 months is up 33% to 400K as at September 30th. So most significant successes or reasons to celebrate here are the first 2 customers that we closed, Erlanger Health System in Chattanooga, Tennessee, and San Diego Naval Medical Center in San Diego. The big thing about these sales is that they validated some key assumption for us that underpin our growth plans. The first of that was price point. So actual prices that we are getting paid now are about 20% higher than forecasted. So at Erlanger, we're selling at $225 per SteriTrack unit, which gives us an 88% gross margin at that account on our consumables. So it's approaching software-like margins, and we pay back the cost of the drills that we provide up front within the first few weeks. The second thing we validated was our sales pathway. So we've confirmed that the key champion for us in our sales process is going to be the orthopedic surgeon. The buyer and decision maker at the end of the day is going to be the VP of supply chain at these hospitals or someone with a similar title. The ER operations manager for us was a key stakeholder and we needed to get their approval, but they didn't drive the sale. So what that is it's a pattern for us that we can look to repeat. We are seeing it at some of the other deals we have in our pipeline. And we can build our marketing strategy to address these key stakeholders. The second major success for us it has been our pipeline build. So we've got a healthy pipeline now, and that was driven by 70 sales reps that we've trained from our contract sales force. We've also hired a channel sales manager with experience from a competitor of ours, ConMed. So the reps are proving effective at opening doors to new accounts, and we're trying to leverage these early sales as reference points to build momentum quickly. We've got over 100 accounts in our pipeline, and they represent about 3 million in probability weighted ARR for us. So our goal before the end of the year, near term, is to get to 5 accounts closed by the end of December. We've got 3 centers currently in contracting, representing over 500K ARR. Key updates in fast fashion and other aspects of the business that drive value. So first we launched TrackPack, which is a second consumable item, can double revenue per account and complement SteriTrack by providing all the accessories that a surgeon needs to perform this particular procedure. We invested in IP, filing our PCT for the SteriTrack product line. And third, and unrelated, not directly related, was related to our purpose. We became a preferred supplier of power equipment to Doctors Without Borders. And we were able to play a role in the Haiti earthquake response in August, dispatching 3 same-day shipments that week. And I'm really excited by this partnership. It's going to help a lot of patients, but it also motivates our team and differentiates our brand in the marketplace. So there can be an indirect benefit to our work in our beachhead market. Biggest challenge related to my ask was that this past cycle, we underestimated the length of our trauma center buying cycle. COVID does continue to slow the pace of sales conversations, hasn't halted them, but it has made forward progress slower than we anticipated. The good news is now we know. We have clarity about each step of the sales process, and we're estimating an 8-month average at each of the accounts. So to bridge this longer sales cycle, we're now raising a $1 million convertible note. That's at a $7.5 million pre-money valuation cap, roughly flat to the last warrant round we did this past summer. The note has 10% interest on it, 20% discount. We've already closed $935K on the 1 million and are looking for an additional 65K. So my ask is that eFund participate for the pro rata share, which is about 10K, and we are accepting new investors at a 50K minimum. So I'm happy to engage with folks offline on that note. And just in summary, there's forward progress for us. It's not happening at the fast pace we'd hoped, but we're in a really solid position to reach 2 million ARR. We're now projecting that by June of 2022. We've got the runway to do that with this current round. So thanks for listening, and look forward to engaging with the rest of you offline.
Lawrence, quickly, is the convertible, we're still not clear if it's the EBC approved.
It's not for through the EBC program, but I'd be happy to follow up offline, Peter, if it will work through the VCC tax credit program.
Okay.
Yeah, happy to chat.
Okay, great. Awesome update.
Right, and I just want to chime in, thanks for the questions, but each of these companies will have a dedicated network breakout room. So if you want to do some deep dive, that's your chance. Thanks, back to you, George.
All right, so next company up is Lethub. Do we have Lethub in the room?
Yeah, I'm here.
Oh, perfect.
Hey, thanks for taking the time. Yeah, hey everyone. Just to give you like a quick spiel on what we do and as Lethub, we work with property management companies, rental property management companies who have a lot of properties on the market, and they get a lot of inquiries. So we sell them a software that helps them interact with potential renters and convert them into leases without hiring new staff. So we use AI to do that. This year has been amazing for Lethub so far. We managed to raise close to $1 million, and starting like December, let's say last year. We have 6x in MRR this year and still going. We recently raised a round, and there's I think right now at the moment as we speak, there's 60K remaining in that round. Most of the money is going towards like a new product, which I'll be talking about. I'll try to keep this short. Yeah, so we'll be going at a steady pace of 15%. Organic traffic is now ramping up. We are getting a lot of inbound leads, people who hear about us or are searching about this problem that they have. They find us and they book demos with us. Right now, we're a team of 16 people. Currently 11 in Victoria, and the other 5 are all over the world. And yeah, our churn has been there. We haven't been getting a lot of churn, only a couple of companies. Yeah, so now Lethub with the core product, when we started and we started raising, that was the initial core product, but now we're launching 3 other products. One of them is that we just launched last month was a Facebook app where people can list properties on Facebook Marketplace. We're the only company in Canada that do that. And we're currently working with customers to improve it and release a new version next month. And yeah, we are now integrated with another lockbox provider, like which is in the States, not in Canada. And currently we're raising a smallish round of which only 60K is left for an Airbnb module for people who manage Airbnbs and want to automate things. So yeah, by March, we're looking at hitting like our goal of 30K to 30 to 35K MRR, and then raising our big seed round at a higher valuation, and looking forward to getting into YC or Techstars in Montreal. Yeah, drivers of value has been simple. Like after the round, we hired and trained a sales team, and they're now ramping up. And usually it takes a bit of time to get started. So yeah, but like we're at a stage where now we can get more salespeople in and ramp up sales. And typically we use a sales playbook approach. I won't take too much of you guys' time, but our asks are pretty much around like if you have someone who can sort of want to intro us to a VC firm or looking to raise in spring a bigger round of something around $2 million for a higher valuation. And yeah, with Airbnbs, if you own any Airbnb properties or if you outsource it to someone, we'd love to talk to you, do some more customer discovery before we launch the product for that. So next 6 months are looking really good for us in terms of new products, using our core product and the new products combine and like going to the market with newer things and adding more features. So yeah, so good times for us, and October has been the best month for us so far. Yeah, thanks for taking the time.
Cool, thanks. All right, great update. So next company, it's HTuO.
Hello, can you see me?
I think so. I've got to go through oh, there you go. Yeah, a lot of people on the gallery. Excellent. I can see you.
Great. In that case, I can give a quick update. So we're probably one of the most recent, I guess, groups to join this portfolio. So we probably have the least to say yet. And I'm sorry, I wasn't aware there was a networking session afterwards. So I apologize. I won't be around after the presentation, but I'm very happy to meet anyone who is interested in connecting. So just a few brief points. I'm not going to talk too much about our KPIs that I put up here. I think they're probably not specifically relevant for the conversation, but we're working very hard on our R&D components. We've made some pretty good progress in the last month or so since we've been talking to the due diligence team. We've had our second hire start this month, and we've had our first in-office meeting, which is fantastic because for the past year or so, we've been entirely remote, and it's been nice to have two people in the same office at once. We had our first board meeting with our first eFund director as well. We participated in a competition where we came in the top 5. That was the Valhalla Investment Summit. We're still ongoing with our fundraising for this round, but I'm very happy to say that things are continuing to move along quite swiftly, and we're still looking to close at the end of this year or shortly thereafter. We also now, which I think Thiazo will be happy about, we're also now prepared to accept investment through RRSPs and TFSAs. In terms of drivers of value, we have a couple of things we've been working on. As I said, we're working very hard on the R&D side of things. We have made some pretty good progress, and we're looking forward to hopefully having some white papers out in Q1 of next year. So with any luck, we'll be able to demonstrate a lot more of what our program is capable of doing. We've also begun officially working on the optimization side, which is improving the speed of and performance of our software. And we're also happy to report that we've had our first IRAP project successfully approved, which is a short 6-month project for $50,000. So every bit helps. One of the good pieces is that we've also attracted some attention from a couple of major pharmaceutical companies. Both Roche and J&J have put out feelers to us and are looking forward to getting some benchmarks back, which we'll be happy to report to them, hopefully Q1 as well. With that in mind, we're also looking to start contacting our potential customers, which we have several possibilities lined up, and we're hoping to get moving on that with our MVP specifications so we can develop some letters of intent. In terms of how you guys can help, we're still looking for more Canadian investors. Just to close out the round, we've had some good connections in Toronto, so hopefully we'll see that move forward as well. And of course, if anyone has any particular connections to biotech or pharma companies who might be interested in our platform, I'd be very happy to connect and make some inroads that way. Of course, we're still hiring for 2 positions. We've had a couple of good candidates already, but we're still on the prowl. If you know anyone who's working in physics and molecular dynamics, might be a long stretch, but figured it's worth asking. And finally, of course, we have 1 independent director position open, and we're working on a search to find a great candidate. So if anyone has any great candidates that they might want to point our direction, we'd be happy to meet with them as well. So yeah, of course, I'll put my email in the chat. So if anyone wants to reach out and connect, I'd be happy to do so afterwards.
Great, thanks, Anthony.
My pleasure.
All right, so next company up is Retreat.Guru. Do we have Retreat.Guru in the room?
We do. Hey, everybody. I'm Cameron from Retreat.Guru. Nice to see you all. Okay, well, I'm happy to report that we're still alive as a travel company during COVID. We made it through. And the pandemic we know isn't over, so it's a slow rebound, but I can give you a little update. In terms of KPIs, anyway, if you don't know who we are, think of us as an Airbnb for wellness retreats. And also we're a SaaS company that's built like a property management system for retreat centers. And we're like an ecosystem where we actually bridge the two, and that's part of our strength. So during COVID, since COVID, I guess, or since last year, I met with you guys. We had a 200% increase in our traffic for Marketplace, which is great. We're now at 4,000 daily visitors. And we've actually found out how to convert them better into purchases, which is we've really increased our conversion rate optimization. Revenues have increased a slight bit because I think our SaaS has been slow to take off. We've had really good success with Marketplace. We've got 500% booking increase from last year. That's easy to say because COVID just went to almost 0. But from pre-COVID levels, our Marketplace has actually revenues gone up by 68%. So that's definitely a sign in the right direction that we really understood how to convert traffic into purchases. And SaaS has been a little bit of slow to get out of the gate. I think retreat centers are slower to move, and they're just shy to purchase. But some of the things that we've seen recently is we're starting to see an appetite for SaaS, so that feels good. And a big win for us, we just hired a head of product, is Shari Harrison, and she's former head of product at Apple, and she's now come to join the company to head up our product, and she's incredible. So we're just really happy to have her in the team. This is month 3 for her, and already it's just incredible to see what a genius can do. So also good news for us, we just finished a rentals product, which gives us access to a sub vertical for the retreat center market. So we think that with the timing of people understanding that wellness is important, and we're starting to we're feeling this pent up demand for travel that still can't be fulfilled. We feel we're in a pretty good place right now for growth. Also, we're seeing a larger tolerance for psychedelics, and as we see them go more mainstream. And of course, a lot of some of our verticals of the marketplace are for psychedelic retreats in areas where it's legal. So this is showing us a signal that it's a good time for us to raise, and we have so we're actually planning a Series A for Q1. It's exciting for us, and we're waiting to see the marketplace actually take off as a product. And now that it really has, we feel like, okay, this is the time. So of course, how eFund can help is help us network and contribute in the round. That would be fantastic. The snapshot of our company, I think we've put a lot of effort into standing up 2 products, but they're both in a place where they're still in infancy. I know it sounds crazy in that we're here for 6 years and the product's in infancy, but we've not really ever hit a moment where we could scale the SaaS, and instead of hitting that moment, we stood up marketplace. And so now we have an opportunity. We have built 2 strong foundations of houses, and we need to put the first and second floor on. So we're looking at 2022 as being an explosive growth year for us. And I guess that's all I have to say.
All right, Cameron, great update. Exciting. All right, next one is Mazuma.
Hi, I'm Miriam. I don't know if you can see me or hear me.
We can hear you.
Hear you? Okay, that's fine.
Definitely.
I'm Miriam. I'm the marketing manager at MazumaGo. I'm just subbing for Matthew, our CEO, who couldn't make it tonight, unfortunately, to give you a little bit of an update. I would say quite a lot happened and changed at MazumaGo over the last 6 months. We saw some great growth. We put a lot of money into growth and marketing campaigns, and we changed our pricing model earlier this year. We had a first change, I believe it was in March, and changed from a purely flat fee to more of a percentage-based pricing model on our transactions. And that allowed us to really grow our revenue. Our average revenue growth month over month over these 6 months was 40%. And our customers, we barely got any feedback saying that it was too expensive. So our customers were still willing to pay that, and they really see the value in our product. We also figured out that our main customer vertical really is construction. They are our highest revenue customer. They love us. Our retention rate with construction companies is 90%, and they are very low tech, I would say. So for them, our system really is a huge improvement in their processes. And that's really become more clear over the last 6 months. So we want to focus more on that going forward. We were also a part of the Y Combinator summer batch. We went through that program and got some great connections and great advisors in the States. And from that program kind of evolved our next step, which is going to be expanding into the States. So far, we're only operating in Canada with Canadian businesses, and we are currently building out the US product. We also raised around at the end of Y Combinator, we raised $2 million US to build that product for the States. Our Canadian product will still be there, but we're not investing more money at this point to grow that because we really want to focus on the States. And we see a huge market potential there. The construction industry is huge in the States. And the problem is very similar to Canada. The majority of the construction companies in the States still use checks to date. So that's really what we want to focus on. And also the US market offers us a lot more flexibility and allows us to build product a lot faster than in Canada because the restrictions in Canada are just a lot more strict that we had to build around. So we're hoping to launch a product in the US in Q1 22 as a beta version, and then go from there. Our drivers of value have been customer referrals. We're running a pretty big brand awareness campaign in BC around Victoria and Vancouver. We had radio ads, we had billboards up to help us really get our name out there and build that trust with people when they hear or see our name somewhere before we reach out to them. That's worked really well. We've been partnering with construction associations, advertising in their newsletters, having affinity programs. That's also worked really well, and we want to continue doing that in the States. How eFund can help, we're always happy to get user feedback as you're using our payment processing platform as well. Feedback of our Canadian product will help us build our product for the States better. So feel free to always reach out with feedback or ideas. And if you have any connections in the US market, specifically in the construction, then please let us know as well. That'd be great.
All right, thanks, Miriam.
Thank you.
All right, Target Tape. Do we have Nick here? No, right? I didn't think so. Okay. I can go through the summary update. So certainly some progress from last time. KPIs have certainly increased, and also from reasons to celebrate as intro or continued success in Brazil, which is a market that they're going into, from a safe block product line to the 5 new procedure kits approved in Brazil in October, and 150 to 200 procedures per month. And they expect that to increase to about 500 to 1,000 per month. Drivers of value, expansion from 1 to multiple procedure kits, continued success of the safe block, and approval from Anvisa. Anvisa is equivalent to the US FDA, which is needed to be have commercial success there, and high interest into their procedure kits, as well as other distributors in Brazil. And their ask is really from eFund is to distribution, both in the US and other territories globally. So anyone who has connections into distribution, that'd be greatly appreciated. All right. Next would be Optigo. Do we have Optigo here?
Yes, I'm here. Hi everyone.
Lovely.
Good to see you all. Thank you for your time. Thanks, George. Let me just go through this quickly. Again, for those who are not familiar who we are, My name is Ping. I'm CEO and co-founder of Optigo Networks. We are a specialized networking company for the smart building industry. We do have two product lines. One is a system, hardware and software deployment for connecting sensors and actuators inside of smart buildings, commercial smart buildings. Second is a SaaS software product to analyze communication of these building IoT devices to look for anomalies and help our customers, building owners and building managers manage the system. I apologize. In the projected sales column, it should say 2021, not 2020. Last year was a decent year and decent growth in the ARR. That's where I'll point out to. On the system sale was relatively flat. The pandemic did not help with installation of new systems, but we did benefit from people working from home and wanting a digital approach to managing their building. So hence the growth in Visual BackNet, which is a SaaS product. This year, we're looking at a total sales bookings around 2 million. We expect to beat it by a little bit, but about $2 million, with still a similar ratio between the hardware business and the software business. Some of the highlights, we had a gentleman join us full-time by the name of Joe Schuster. You can look him up. He was ex-chief legal officer at the Vigilon. He's been on the board of directors for Optigo for about a year and a half. He was very active as a director and decided to join the company full-time to help move things forward. We have a CRO joining December 7th, to be clear, someone from the industry. He's been doing it for a while. He was previously with a company called Carbon Lighthouse. We continue to sign corporate subscriptions. So when we first started, we were targeting individuals, technicians that manage buildings. We've been moving into the large system integrators. For example, Climatech is a Bosch company. They have signed a corporate subscription. And on the Optical Connect side, some of the fun things is we now have new partners in France and South Africa. We did not purposely invest in there, but as they are growing their portfolio, they reached out and we signed a partnership with them. On the value side, I mean, we continue to build a brand in the smart building industry, continue to build the brand around a complete what we call operational technology network. As these IoT systems grow in smart buildings, the concept of a network that's separate from the financial data and the user data, emails and accounting, all these things, is coming into a brand called OT Networks. We're really positioning ourselves as the OT network experts with the solutions from cradle to grave, from installation to maintenance of these buildings. That's a brand we've been working on for years, and now the industry is catching up. And I believe that Optigo is now synonymous to OT Networks. We continue to develop the partnership with Disa Controls, which is a company owned by a large entity called Acuity, a leader in lighting in the world, and Allerton, which is a Honeywell company. From the eFund side, if anyone here knows experts in the industrial controls, particularly a protocol called Modbus, we'd love to talk to them. It is an area that we're starting to do some research to expand into it. A lot of the energy systems in smart buildings use Modbus. We'd love to just better understand what that market is like, what are the challenges they face, to look at utilizing the technology we've developed for the smart building control space and go into industrial controls. I should say also, if anyone here knows anyone in the lighting control space, that would also be appreciated. So industrial controls, Modbus is a protocol, and lighting controls, which is a very fragmented industry. Point them my way. I'd love to just ask them some questions for market research for the next 12 plus months roadmap. I'll leave it there. If you have any questions, you can ask now, or you can reach out directly. I will leave my email address here on the chat. Feel free to reach out. Any questions?
All right. Thanks. Okay. And just a quick update. I'm also one of the portfolio companies. I think this is the last one. I didn't receive any more.
We have John Pollock from
perfect.
Mesentech.
Excellent. We got Jonathan.
Hi, everyone. So Mesentech is a therapeutics company. We make a drug that will heal bones specifically after surgery. So there's a lot of bones. People break a lot of bones every year. So there's about 7 million fractures a year in the US, and about 300,000 of those never heal. So you can put in a bunch of screws and plates and rods, but the bones don't heal. That's called non-union. And so we make a drug that stimulates the bone to start repairing itself. It's based on a natural human hormone called prostaglandin. And Mesentech is not the first company to figure out that prostaglandin is a really potent regenerative hormone. Pfizer, Merck, and a Japanese company called Ono, they all actually had prostaglandin programs in the mid-2000s. The problem is that if you just take a whole bunch of prostaglandin, it will probably knock you out cold, and you'll faint. So it has a very, very tough side effect profile. What Mesentech does is that we're a drug delivery company. We get the drug to be released just in bone, and that's the technology of the that we have granted patents on right now. So since eFund invested, we've closed the deal with Merck worth nearly $2 million. And they actually own a little bit of equity in our company as well, and they have an option for a first negotiation. We completed the first GLP studies. Yeah, so those are like the regulated studies for FDA in order to allow you to start human trials. We started the monkey, we've done 3 different monkey toxicity studies, and it looks like we've absolutely cured the side effect profile of the prostaglandin, which was the hypotensive side effect. We've raised 3.6 million of other money and additional 1 million of non-dilutive. So I got to say also, I'm an investor in eFund, and I'm incredibly happy with being part of this. One of the things I sort of said to Thielzel is this is a non-cliquey investment group that cares about returns. And I care about returns, and I'm not such a fan of politics. I would never do well running for public office, and so I never plan to. But I do like building therapeutics companies, and the bone space is very difficult. There's been only 5 approved products in the last 20 years, but that means that the returns can be very, very good too. Just as an example, our product, the only competitor that we have is really surgery. And surgery for a non-union is a revision. You got to pull out all the old hardware, put in new hardware. What they do, then put in a bone graft that they get from your hip. That's 2 different surgical sites, and then they pray, and then the surgeon will say you got 50-50 odds of it working. So we can price our drug treatment, which is a once a week subcutaneous injection. We can price it fairly steeply. 15,000 is not a lot compared to the cost of a second surgery and 30 weeks of recovery for a tibial non-union. So I'm really excited about what's coming up for us in 2023. That's not right. 22. 22. So in 22, Q3 or 4, we're looking at our first human trial, and we're raising 4 million. We've got about 1.4 committed in hard commitments. We have an additional 4 million in soft commitments, but basically I'll say we've got an addition, I don't count soft commitments until they sign the sub-agreement. So the original DD team from Vantech is back on the case, and we showed them now our much bigger diligence package, which is now 1,200 pages. Fadia is going to be the lucky recipient of that. And so we're raising 4 million. If people are interested, we're EBC eligible. You can also put the investment in Mesentech in your RSP through Western Pacific Trust. Again, thanks to Thielzel for cluing us into some really good people in our ecosystem. And I have to stress, none of this would be possible without the ecosystem that others have built before I arrived here. It is incredibly important to have financial instruments and the service providers that make it possible for people to be able to invest efficiently into companies. We still have a long way to go, but we're definitely a far, far ways ahead of a lot of different places. It takes a lot to make dreams into reality, and financing is one of those ingredients. And so we're incredibly grateful here at Mesentech. Vantech was one of the earliest investors, and an enabling one at that. So thank you very much.
All right, thanks, Jonathan. Great update. And now we've got Stephen. So I'll put your slide. I did find it. Apologies for that, Stephen.
Not a problem. So Karen and I will attempt to be brief. But many of you may wonder what Ibbaka does. So I thought I'd just spend a few seconds telling you about how we help our customers. So our customers are generally innovation-driven companies that are at an inflection point and need to make major changes. And those changes generally involve how they communicate and capture the value of their innovation and what skills they need in order to deliver it. So let me give you a concrete example. One of our customers, our new customers this year is Ryder, the transportation company. And you may be thinking, that's odd. I would not have thought of Ryder as a customer that needs Ibbaka's platforms. But like many businesses, Ryder is changing itself into a software business. And it has a very important software layer that it uses that is increasingly strategic. I'm sorry. Just gonna get rid of that. That is increasingly strategic. And they've come to us to completely renovate the value and pricing model for that piece of software. And to use our software platform in order to manage value communication, data capture, and pricing strategy. And so this is a, not necessarily a typical customer. Most of our customers are more software based, but it is typical in the sense that it is an innovation-driven company at an inflection point. And our buyers are largely the CEO. We have one customer that our prospect that we hope to close within the next few weeks, in which it was the CEO of a previous customer. He's now moved to a new company, and he's come back to us to renovate that company as well. So the CEO or the most senior product or revenue leaders in the company are generally our buyers. And when that's the case, our sales cycle has become much, much shorter, measured in weeks now rather than months. 2021 was a reasonably good year. I seem to have jumped 100 years into the future. That should say 2021 instead of 2121. But we're set up for 2022 to be even better. One of the reasons for this is we haven't announced this yet, but we've made a major partnership with PriceFX, which is the dominant player, or is the it's not necessarily the dominant, it is the fastest growing and most disruptive company in the pricing software space. And we are partnering to take the Ibbaka value pricing dashboard platform to medtech companies. And our largest company is a company called BD, Becton Dickinson, which is a very large $20 billion revenue medtech company. And our business there is growing at about 100% a year and is increasingly switching from being a services business to a subscription business. I'm going to stop there and turn the talking stick over to Karen, who will talk a little bit about how eFund can help us. Karen?
Yeah, so basically, thank you for that, Stephen. So I think the key thing of giving that context is to help sort of see the asks that we have for eFund. So I think everyone in this room is probably struggling to find development talent, especially in today's world where we're so dependent on digital and data. And so for us, we are also looking for development talent. So if you guys do have recommendations on how to best find development talent, please let us know. Also, as per the reasons to celebrate, we believe that the Innovation Mentor Network is a key motivator for not only what we're trying to achieve at Ibbaka, but for all of us who are committed to the innovation community. And I think that's everyone in eFund, because we are investing in innovative companies. But then when I sort of think about the investors in eFund and so think about the model around due diligence, there's a lot of learning that can be shared among our networks. So I would like to really ask eFund to think of ways of how it can also be a connector and participate in the Innovation Mentor Network. Also, I think that for us, we are very much about value and value drivers. So I actually really appreciate Miriam's update where she highlighted the drivers of value, especially on the pricing side. So for any CEO or any company which is having difficulty to actually define and measure the value that it is providing to its customers and its stakeholders, I would like them to let people know that Ibbaka exists, because with our value pricing dashboard, it is exactly that tool which enables companies to quantify and communicate the value that it's delivering. And as you know, when it comes to pricing as well as winning market share, you have to be able to articulate value well. And so that's our 3 asks.
Excellent. Thanks, Karen. Thanks, Stephen. All right, so I'm going to stop sharing this slide. And we've got one more company, which I'm going to, sorry, too many presentations open here. Hold on. There you go. All right. Okay, all right. And also an update from myself. Full screen mode. So since the last time, this is an update for SonicIncytes. So what we do, and is that we have a handheld point of care ultrasound solution, which quantifies and assesses liver health. We're focused on the fatty liver disease or NASH segment, because that is a growing segment, especially due to the whole COVID crisis. People consume more, and as such, people actually are getting more prone to diabetes and overweight. So about 1 in 3 Americans have it, 1 in 4 people globally have the condition, and a good about 10% of those to 15% actually have the active form of disease called NASH, and that results in liver failure, cirrhosis, and cancer. So I have 3 people in my immediate network that have NASH itself, and I've found 2 of them through SonicIncytes. So it is much more prevalent than you think out there. So in terms of KPIs, we've got 34 installs over the past year, which we started from basically 0, even with COVID. We have 8 paying customers, again, starting Q2. Our monthly recurring revenue, that should be MRR, is about 9,500, and total contract value. So our contracts are 3 years. That means that we have contracts with customers for 36 months, about $356,000. And reasons to celebrate, well, the news release has not gone out yet, but we are closing at 7.3 million US, 9.1 million Canadian. We've got signed up a channel partnership with Apex Clinical Solutions, which is a kind of almost a reseller. And we had our first in-person meeting, trade show of the year, which is great. Great to have in-person feedback and interactions with physicians in the gastroenterology space. And we've had nice success there. And also have begun some provider network discussions. One of them is VA Medical, Veterans Affairs Medical, which is the biggest public provider in the US. And drivers of value, we're looking at completing our performance claim study to MRI. We're almost done that. We're also in progress with our FDA breakthrough status for NASH, which is an increase our rate of reimbursement. And we know that rate of reimbursement and coverage are king in medtech. And also we're working with drug lifestyle intervention companies, soon to sign up a handful of them, but first, and as MazumaGo Pharma, that's still pending. And then our goal for, of course, is to increase our SaaS. We are a SaaS company for MedTech. We're looking at 2 million by the end of the year. And asks to eFund is that we're looking for more introductions to provider networks. So in the space of gastroenterology, diabetes, weight loss, and just preventive care, and introductions to pharma and other interventional companies in the space of diabetes, obesity, weight loss, and looking like everyone else to hire software and customer success people. So I'd like to have actually anyone introductions to talent. Thanks.
Great. I believe that was the last company to present. Is that correct, George?
That is the last one.
Thank you, everybody, for coming to the eFund Open House, or semi-annual company updates. And hopefully 6 months from now, when we have our AGM in June 2022, we will be at the Jericho Tennis Club.